Pump into close. Fail. Ooh. Oh, lost 55. Got it back. Yeah, looks like we're going to close at 55. Oh, maybe not. Ding ding. The average price there is going to be around 45.50. Yeah, we'll see. All right, that's the end of the day. So let's take a look. Ooh, so still dead center in the neutral range for our close. That should drop realized volatility a little bit more. Yeah, and pretty much flat on the day again. So, I mean, we have PCE in the morning. Obviously, that's something that could shake this up. It looks like tomorrow's upside interest is a little weaker than it was today. So maybe we're finally starting to see the bulls retreat from their positioning, but they've compounded so much Vega risk to the downside. They really can't let this fall just yet. And if PCE is bad, I know a lot of the projections are for like zero point 0.1. This would be the bull case. Anything higher than 0.1, like 0.2, that's going to be bearish for month over month. The year over year is probably going to continue down, and core may be flat or go slightly up. I think if everything stays in line with expectations, we can stay at 45.50 until JPOW. If not, we might finally lose this level. So if it comes in a little hot, we may finally break down from here. Commodities had a little bit of a rally today. Dollar down, yields way the down. Despite their little rally earlier, they've continued to drop on the back of the 7-year auction. The 7-year auction came in 22 points above spot, which was a big old fat tail, but it hasn't driven that big of a spike in vol at the end of the day. Correlation's still turning around on the 1 month and flatlining on the 3. So we're still seeing a lot of, you know, vol selling in equities, and I think we just haven't really seen any long vol in indexes yet. So it's turning, but very, very slowly. JPY carry trade dropped today on the Nikkei news by about 40% on the swap. Yields are rocketing, but the vol convexity is starting to turn around. Obviously, we're still looking for yield return on volatility to turn positive again before we start to get any serious downside, and we're pretty far from that still. Skews still dropping, but not much. And that's kind of your price of tail risk. So, and that, you know, as correlation turns around, we should see that come down more as tail risk price increases. It does look like some of the S&P fell below its 20-day moving average, but we're still very high, right? If we, you know, yesterday we hit 90.75% of the S&P was above its 20-day moving average. Today it's 86. Historically, you know, this doesn't last very long. Periods where, even in periods where the market's very bullish, for all of the S&P to be this high above its 20-day moving averages for any significant period of time is very, very rare, right? And usually only occurs during, you know, like after crashes or after massive corrections. So this is after a large correction, so it's not unusual, but it should, you know, statistically pull back at some point. That's about it. But thank you guys for tuning in. I'll see you bright and early tomorrow morning at 9 a.m. Munger passed. Really? No way. Oh shit, he did. That's crazy. Almost made it. Is it crazy for a 99-year-old to die? No, I guess not. But 4 minutes before market close. He's a bit older than Warren, I think. Anyway, yeah, we'll see how tomorrow goes. Thank you guys so much. Have a great night.